Fun. How we doing? Everybody had a good day today. We'll give it a few minutes. You know, wild day. It's a fun one. Didn't do too much. Watched it more than anything, but it's always fun to watch an exciting day in the market. How'd everybody else do today? It's a pretty wild one. Past couple weeks just been wild. Past month and a half been wild. Nice. Yep. I had uh I had one of those today. I had a couple nice ones. I mean, funny enough, I just traded some call bounces at likely spots today. That was really all I did. I scalped one put for like 20 bucks. Seems to be going down though, huh? Well, 532, 533 zone probably got busted even. Eh, yeah, maybe start. Maybe start on some DCA, but I don't know. I feel like we got a little more down in us. 510 seems like max down in my mind. 524. You gotta be. This is if we get down into here, this is where you really want to start looking for it, in my opinion. For you, how we doing? Thanks for joining. Brad. Yeah, I think, and you can start shopping around. This is an interesting one. I mean, if you're into Holden, ugly chart, you know. So this is ConAgra Foods. This is actually, I don't know if any of you guys know Rev. Uh, this is one of his favorites back in the day. And this is like all American made company, not subject to tariffs. Definitely has some nice upside on it. I believe it's profitable. I think it put up some pretty good earnings today. I mean, oh yeah, little beat there. I mean, this is one if you are looking for a little cheap buy, nice potential upside. This isn't some like retirement trade that's going to pay you massive amounts of money, but you've got some nice defined lows down here, and it's worth enough a stab. Nice, yeah, JJ. Oh, so okay, so that was you. So I mentioned this the other day because you also asked about H patterns, okay? And so this one cracked me up. So we got a nice, oops, we got a nice little H pattern going on here that turned into the rip of a lifetime. That was what I really liked. Uh, Fred, got to be honest, I'm the wrong person to ask about those kinds of things. Don't I know nothing about H bar. I know that big money people talk about XRP. So to me, I mean that one I feel like it has a future, but I'm like I ain't gonna pretend like I know anything about that stuff personally. Uh Dr. Grizz, he's the goat. He's the goat regarding all things crypto. Okay, give me one more second. Oh, dude, no sweat. Ask away. I mean, I'll do my best to answer any question, but if I don't know nothing about it, I ain't gonna try to lie. That's a Crypto's a risky business if you're on the wrong side of it, so I don't want to pretend like I know anything. Give me just 1 second. Let's make one more post real quick. Give me a second. Oh, what date is this? I think this is yesterday. Yeah, the second. Yep, yep, this is yesterday. They'll let me pull out the big board, heard around the world, you know? Yeah, total dumper or peanut. Dude, your name gets me every time. So give me one more second here. I'm trying to pull up a couple of notes I got. Um, barely dumped. I know. This one, this is like a pretty impressive. I mean, it's what you know. I haven't seen it. You know, yeah. I haven't seen one of these. You know, in like uh, few years. It's quite the little gapper we got there. And the gap and go. You know, that's always a wild one. When they like, I mean, they gave you hope. You had hope. Like we're bouncing for a couple of minutes, and then they said, "Nah, no bounce for us." Yeah, my guess would be carry trade was close. I mean, this one was big, but just such a different move. Like the massive gap to the continued like $10 sell or whatever, you know, those ones are always like to me, the crazier ones. But I would imagine that, yeah, likely some of those ones back. Uh, oh, it's not even long enough these days. But still, I mean, you know, and you got to ignore numbers and think about percents. You can still see there was some battle. I mean, we had some big gaps. That's a big gap right there for sure. It's probably a 5-6 percenter right there. You know, but so we had some big gaps, but there was battles. Today was like there was 5 minutes. They put up a fight for straight up 5 minutes today and then just gave up. Okay, with that, we are gonna get to rolling. Welcome, everybody. Happy to have you here, Dirty River. Tonight, definitely one of my favorite topics to talk about. Of course, got charts pulled up. Always try to tie it into charts, but we are talking trading psychology tonight. I reached out to FaZe. If we're lucky, maybe FaZe will join us for a little bit. He's a guy I just love to chat with and love to talk trading psychology with. But like I said, this is one of my favorite things to talk about. Something that I oftentimes tell people is that you know, trading is relatively easy. If you figure out something that works and you do it over and over and over and over again, it's going to work. You know, you'll figure out how often it will work. You know, that is literally your win rate, you know, and so you'll figure out how often something works. And if you just sit around and wait for the same thing to happen over and over and over again and just repeat it like a robot, you know, sometimes you're going to be right, sometimes you're going to be wrong, but it's going to work. You know, trading is relatively easy. Trading psychology, an absolute mess. It is the real thing that people struggle with. You know, I have some friends amazing at charts. You know, we chart differently. They look at different things than I do, but I see what they're looking at. When it comes time to execute, they just can't make it happen. You know, maybe they're stopping out of trades they shouldn't stop out of. They're rushing entries when they know they shouldn't be rushing entries. You know, these are all the technical aspects of trading psychology. On the other side of it is just the mental stuff. That's why today Toasty wasn't going to be able to make his lecture, and so you know, they asked me, you know, do you want to do a lecture or do you want to cancel it? And I figured I don't know if there's a better day than a day like today to discuss trading psychology. So normally when I do these lectures, what I like to do is just open them up to all of you. You know, I'll talk here for 5 minutes, and then I want to talk with all of you and talk about the issues that you have. I encourage people to, you know, talk about anything that, you know, you're feeling. What I always tell people is if you are having an issue, I can 99% guarantee you somebody very likely in this lecture, even with only, you know, 30 of us in here or whatever, there's very likely someone in here that is struggling with the exact same thing that you struggle with. So I like to really open these up. I like to really open these up to uh, uh, you guys all talking about the things that you look at and the things that you care about, and the struggles you have. So on a day like today, obviously FOMO, everybody feels FOMO, everybody feels like they're chasing something. We don't, this right here is uncommon. We were trading into the close yesterday. Some of us hit a little strangle on it, got some nice downside, got some nice upside. Well, I described it to people as, because oftentimes I'm going to tell people don't strangle into the close. Like, you'll just end up getting burnt on both ends a lot of the time. But what I was explaining to people was, we have one of the largest economic decisions that's happened in our country in, like, maybe a few decades coming. So we could assume that one side was going to pay very, very well on the strangle. Well, then this happens and everybody feels the same thing. Oh, I'm, puts it open, blah, blah, blah. I'm getting into puts it open. They're just ignoring everything. Ignoring everything that's going on around them, seeing big red candles and saying, I got to short this. Today, obviously, one of those days where it worked out. Well, I mean, if you got in there short on the open, you got blasted. $4 against you instantly. Of course, ultimately it came down, ample opportunities to short that were not a chase or anything like that. But people get set in their mindsets. They see the news is bearish. They see everybody on Twitter is bearish. Trade floor people are, talking short every red candle, it gets into your head. And so that's why I like to talk trading psychology, because it's such a big part of the market, even just in our day-to-day trading, everything always comes back to trading psychology and us trying to make the best decisions we can, us not holding losers for too long, us trying to hold our winners to, our target, or as long as, as long as we can, basically. And so that is all trading psychology. Having the patience to wait for an entry. What I try to teach people, just, a big part of trading psychology is people panic while in a trade. And there's time to panic in a trade. Do not get me wrong. When you were, sometimes all of a sudden you were kind of right, and then all of a sudden you were just, majestically wrong on a trade. And you might panic out of it, but oftentimes it's going to be the right choice. But what I try to teach people in a trade is, the most important aspect of trading psychology, in my opinion, I know if Faze was here, he would very likely agree, is building a trade plan. When you build a trade plan, you can get rid of basically all of the feelings of, FOMO or greed or chasing or any of those things. And so that's always what I like to talk a little bit about. And we aren't talking about how to build trade plans, like you need these XYZs to line up to take this trade. We're just talking about the very basic idea of a trade plan. And a trade plan to me is entry, and in this order of importance: entry, stop out, and take profit. Those are the three things that you need to have identified before you take any trade. And so when you identify them, you lose or you remove the opportunity to, feel stressed out or any of those kinds of things, because you already know any of the outcomes. Because of your entry, you know how much money you're going to spend. Because you've already identified your stop out, you know how much money you're potentially going to lose. And you've identified your take profit. So you know how much money you can make. Well, when you remove all three of those, or when you have all of those three laid out, you remove any chance for FOMO or anything like that. You buy when your entry comes. You sell when either your take profit or your stop loss comes. And so what I try to teach people is anything that happens in between those 2 points, either taking profit or stopping out, is just noise. And I think that's where a lot of people struggle. Maybe they buy some puts, bad entry on puts, they take their bad entry, they don't wait for a bounce to VWAP, and then they start averaging. Oh, little red candle average, oh, this is going against me. And they keep averaging, and they start doing too much during the trade. If you take this trade, bad entry, whatever it is, and your stop out is up here and your take profit is down here, I'm just pointing random places on the chart. It's nothing, we'll get rid of the ribbon so that the chart's a little less intense. So You enter down here, your stop out is a close up here, your top profit target is down here. Anything that happens between a candle closing up here and you hitting down here, and we're ignoring the prices, and you hitting down here is noise. You do not need to care about it. You do not need to worry about it because your trade plan will solve almost all of your trading emotions that you might battle. Because again, you have defined risk, you have defined reward, and you have a defined entry. So who cares if the candle's going up a little bit, then going down a little bit, and then going up and then down and up and down? You don't, because your stop loss is up here, your take profit is down here. Of course, you should always be trimming contracts, blah, blah, blah. But your stop loss is up here, your entry is here, your take profit is here. Anything that goes on in here doesn't mean anything to you. Anything that goes on in here doesn't mean anything to you. You buy and then you wait until here hits or here hits. And this part in the middle of the entry and the selling for either a loss or making money is where I see people struggle the most. It's when they start making the bad decisions. It's when they start saying, oh, well, this isn't really moving. So I'm going to add a couple more contracts. Maybe their contracts are losing a little bit of value, just from IV shifts or theta or the market going against them or whatever it is. So they start getting worried. Maybe they start adding contracts. You need to just let the market work. And until the thing that occurs that either triggers your stop loss, you get your candle close up here, you stop out. You hit down here, you take your profit. When one of those happens, great. Your perceived loss and your actual, reward might be a little bit different just because of time decay or whatever, but you need to be trading based on the chart. It will remove all of your emotions. It will remove all of that. And so that's the first thing I want to talk about tonight, because I think a lot of people struggle with that once they click the buy button, that's when they start making the rash decisions, stopping out. Oh, it's going against me. And maybe they're watching a 1 minute chart and they have a 1 minute candle bounce against them. And like, oh, it's going against me. I gotta stop out, or maybe they're just seeing some wicking action. So maybe they just take break even because they aren't really looking at the chart. Your plan tells you what to do. And so this gives, it starts to become very obvious when you start to say, we want to reduce our risk. So wherever our stop out is, the closer we can enter to our stop out, the less we're risking and potentially the more reward we're getting. But it's all about controlling your emotions and waiting for those opportune entries to come to you. So does everybody get what I'm saying there as far as, just build your trade plans? And if you need help with trade plans, I've got lectures on it. Hit my DMs. If you want, the technical side to talk about things to identify for a trade plan, then great. We can talk about that in another lecture anytime. This is just merely about how a trade plan affects your trading psychology. And it does a lot for trading psychology. In my opinion, it's, some of the biggest things, or one of the biggest things I see people struggle with. So then the next thing that we're going to talk about, and so I have a list, lately I've been trying to do about one trading psychology lecture a month, just because they help people. They frequently aren't the busiest classes. We're able to talk a lot. And after a trading psychology class, I almost always get a message the next day. Maybe it's from one person, or maybe somebody mentions something on TradeFloor that says, man, that trading psychology class last night, I stopped out of a trade I should have stopped out of, on time. And if I wouldn't have stopped out, I would have lost a bunch of money. I see a message like that. Or the other side, I thought about the trading psychology class and, I knew where my target was. This was my trade plan. I held until my target, so you're happy with it. So that's why I love doing these. But because I've done quite a few of them, I know things that people struggle with. And so that's what I'm going to talk a little bit here. And it's just going to kind of trail into, I want to talk to all of you. I want to see if all of you agree. But now we're going to start getting into the things that people struggle with. And since I always try to kind of relate things to the chart, really relate them to how we're trading, those are kind of the ones we're going to talk to first. So we can, of course, get to the real psychological ones, your FOMOs, your greeds, your all of that kind of stuff as well. We'll get into that, I'm sure, because a lot of people struggle with it. But how do we apply our trading psychology to the chart? And the number one thing, and I've already talked about it a little bit. The number one thing that I see people struggle with is stopping out. It's cutting those losers, it's something that I it's the hardest thing to teach. As many of you guys know, I do one-on-ones. I teach, there's no questions asked. I'm the most focused person on education in OOT. It's what I really like to do. And people hate cutting losers. People hate admitting that they're wrong. And it is the single-handed best skill that you can work on as a trader. There's many ways in the market to be risk averse, to trade with less risk, less size, blah, 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 all different kinds of things. But if you don't have the ability to stop out when you are supposed to stop out, that is what, at least in my experience, the biggest struggles that I see people have. You might have the best trade plan in the world. Your stop might be super tight. Maybe you're risking, 8, 10, 12% on the contract. Of course, never stop out based on that, but you've analyzed your risk reward. You aren't risking much. One thing leads to another, and you're like, oh, I'm going to hold a little past my stop. Oh, well, wow, it's really going past my stop, because we'll get into that in a second, but oh, it's really going past my stop. Oh, we'll get a pullback. And then you keep holding and you keep holding. And what could have been a 10% loss is a 30% loss, and then a 50% loss. And then you start panicking and you don't know what to do. And you start wishing you respected your stop loss. And so that is hands down the number one thing that I see people do. And in these lectures and in one-on-ones, it is always I don't respect my stops. I might hit, I hit 12 trades in a row, and then I gave all my profit back on one trade. These are all things that it's trading psychology. And what it all boils down to is, and this is an interesting way to think about it, when you stop out, you are you're accepting defeat, as you should, because you're incorrect, but you're also consciously making the decision to say, hey, that money is gone. And I think that is where people really, really struggle, is that they have to it's gone, it's not coming back at that point. And it's hard for people to click the button. And then it results in those much larger losses. That's where the issues really start to arise, is what could have been a very small loss if you just stopped out very frequently turns into a much, much larger loss. And so I like to, I like to, I like to talk about this. This is, like I said, I like to apply things to the charts. And when I teach trading and when I teach, you know, how to trade and the actual technical aspect of, we're entering here, we're stopping out here. I always teach a lot, as much as I can, about stop losses and a way that I like to do stop losses. And it's not for everybody, but I like to, because I know so many people struggle with clicking that stop loss button. I know so many people struggle with it. It's always a great thing to bring up in these trading psychology lectures. So if we're just, again, we're just making up trades, for any of these examples. Well, what I like to tell people is, say we're buying the dip right here for no reason other than we're buying the dip. Well, what I like to tell people is you actually need to have two stops in mind. So I can look at this chart and I can say, and actually, we're going to say this one just because it goes wrong, So we're buying the double bottom here. Fine. We know our target is up here, and we know our stop loss is really a break at this low, So any candle closing below this previous low. So basically we know, our perceived stop loss is a candle closing right around here. Well, that's fine. That's great. That's your planned stop loss. That's not something that's not something that you want to have a hard stop loss sitting there, because if you're, decent at reading charts and you're thinking about where you're placing your stops should be below breakdown or above breakout points, because it means, the market is continuing or reversing or whatever it is. So we know that this is our planned stop, a candle close here. Well, in our mind, we also need to have, I don't care, a protective stop. I don't care what you want to call it, the oh shit stop. That's what some of my friends jokingly call it. It's when you're wrong. You've risked the maximum amount that you were ever willing to risk, because we can plan this trade and say, hey, I'm going to risk 10 or 12 bucks a contract. Great. Well, we also know that we're waiting on a candle close to prove us wrong. So we're waiting on the candle close, and we know that it can end up lower than here. It's oftentimes not going to close just right at our stop loss level. If it breaks and it's placed on something important, then we will oftentimes be able to say, it's going to go through it ideally, because that's, if your stop loss isn't placed at a strong spot, then it's, you know, you should get a big break if it comes. So you need to have a protective stop. And here's our nice plan stop if it comes. Our protective stop, and we're just going to make it up. Say it's 541. Our protective stop is 541. Maybe we're risking 12 bucks a contract here, but by the time we get down here, we're risking 30 bucks a contract. And that is, to us, worst case scenario. So this is where you place your hard stop. And this is just a method that you can use, and maybe this candle closes up here and you get a much smaller stop, no big deal. Maybe this situation happens where it gets hit. This is a hard stop, and this is the maximum amount you are willing to lose. And so when I tell people to do this, it solves that issue of not being able to close the trade. If you take the control away from you and just leave it on the chart, your stop loss is there. Our rule with the stop loss is a stop loss only moves in one direction. So if this is our stop loss and we start making money, then the stop loss moves into profit. That's the only way a stop loss moves. If you have your stop loss down here and this is your hard stop and it starts selling to it, you do not move it down. You only move a stop loss up. Build that habit and it will help you so much. And then set these hard stops. It's going to be a bigger loss than your planned stop, but it is a protective stop for a reason. It is there to protect you for if you're wrong. And so, again, just on this example, we're using random numbers. Don't go try to base a trade on these, numbers or anything tomorrow. 541, that's where our hard stop is. Here's a situation where it works great. Market sold another $1.50 under there, your contract would have been destroyed. You leave it there because you are wrong. And that's, the big hard thing for traders to deal with, and why they're frequently, I got to widen my stop a little bit, all of those kinds of things. You don't. Your protective stop is your protective stop. It is the maximum amount that you are willing to risk. And so why do we do this? I'm sure most of us in here at some point have all had that trade where it closed a little below our stop loss, but maybe like a couple cents. So we were like, okay, I'm going to hold it to see if we bounce back over there. We didn't get like a strong close under my mental stop out level. So I'm going to hold it to see if it bounces. Well, then you get cratered on, and you get blown out. That is another great time where the protective stop shows up and it protects you. It shows you reduced risk. Are there going to be times where this thing gets tagged your protective stop and you stop out on the absolute bottom tick and then it goes in your direction? For sure. But in the long run, it will always save your money. It would always save your money. And so that is something that I can't recommend enough. You know, it will really, really help you in the long run if you start thinking of your losses or your stop losses in those two ways. Your nice perceived mental stop, but then your hard stop that goes on a trade and it does not come off of that trade. Let's see. So that's it. That's my spiel. And now we're gonna get into all of you guys. We're gonna start talking about, what do you struggle with? Do you like what we've talked about so far? Is it something you struggle with? And what are some other things? Let's try to talk about them. You know, this last half hour, basically a Q&A, open it up to all of you, and talk, you know, we don't want to talk charting right now, but focused on, you know, making it work in your brain is the hardest part. Oh, nice, Robs. Yeah, I know you love the trade and sex stuff. Oh, JJ, yeah, I bet you said there goes fork number 3 when I was doing my, oh, it'll bounce, it'll bounce. It didn't ever bounce. So appropriate trail stops. So are you discussing like the actual trailing stop order that trails the stop for you, or are you talking just for a normal trade? I'll get back to your question. So generally speaking, I'm manually stopping out. But I know where my protective stop is, and I'm lucky. I don't struggle. I'm lucky that I don't struggle with clicking sell when I need to, you know, but other people do. So I know where my hard stop is. If my hard stop is at this 541 break, I'm out, no questions asked. But I think most people should put that stop in there. You know, today, don't get me wrong, I hit some calls somewhere right around here, something like that. And I made it very clear that my stop was liberal on those, you know. But in a real trade, you have a spot where you stop out, you know. And I don't have, sometimes I will say in this really volatile market we've had lately, I've actually been running a few more hard stops than normal for sure. If you upgrade to Pro, what happens with your premium membership? Nothing. You still have access to all of it. You'll have access to everything. You just get all of the Pro stuff added as well. So on Thinkorswim, you are not. That is why. So I'll show you. Oh, and sorry, the question was, are you able to sell an option while you have a stop loss set? So that's something that, and you know, this one's not going to look like my normal one. So on Active Trader, I guess it has it up here. If you use Active Trader and you're on Thinkorswim, I don't buy or sell market. The only button that I have is cancel, because if I have a stop loss set, granted, I'm almost always dragging them into profit as opposed to canceling the stop loss. Like I would rather drag the stop loss up to the point below, like say I'm in a contract at $40 and I wanted to sell it at 50, then I'm likely going to drag my stop to 48. And I'm going to let the market stop me out, or if it wants to keep going, I can let it push a little bit more, still in my area. So I oftentimes just drag it up. But if you ever do need to, you know, get that stop loss off, hit cancel and it's gone instantly. You know, it takes no time. Yep, and yeah, and so yep, I use Active Trader on everything. Just because it makes it so easy to get in and out of those trades. And then also when you're using it, when you have options open and you set a buy order or a sell order, it will pop up a line on the chart to show you where it needs to get to. So, you know, and this is something that I always recommend to people. Again, it's a great trading psychology thing. Have orders waiting. You know, people will oftentimes at least trading and voice chat with me. I'm very, very direct about when I'm entering where I want to see, you know, where I want to see things. Man, that's kind of a funny thing on the Active Trader right now. So I know where I want to enter. I tell everybody where I want things to go. I tell everybody the prices that I'm targeting, and then I tell people I have a sell order here. And you know, maybe it's lined up with this level. Maybe we enter calls on this back test. We actually bought some calls down here earlier today. But maybe we're targeting this level. I'm going to have an order waiting there. So if we wick up to it, I'm first in line, you know. I want that order to sell. And that's how I tell people, if we're in a contract and I say, oh, I'm going to be trying to trim some of these at, 46, then I know I'm saying 46 because I've already placed the order and I've already seen the line on my chart. So I know what it is. And then it also will really help you with greed. Say you're entering here and you want to trim here, set that sell order. And then you get filled. And then if this thing pulls back, you don't feel bad because you trim some of your contracts. So once you've trimmed some of your contracts, the pullback doesn't feel as bad. And then if it pulls back to your entry, maybe you can, add to the position or whatever it is. But if you're entering here, you get the pop you wanted and you have a sell order waiting, then you don't let your greed, you don't let your emotions or anything like that get in the way, and you take some of your money. Yeah, I know Weebles like that too. It's really common. And the reason that it's like that is you might have seen the warning. So it tells you you cannot place this order because it might result in an overbought or oversold position. And what that means is, say you're in your contract and you have your stop loss and you have your sell order set. Well, if it wicks down and stops you out and then wicks up, it can wicks up and enters you, and then wicks down, it can enter you in a sold to open put position, which you don't want to be involved with, if you don't know what you're doing. And so that's the reason they have it. It can be a pain, but in the long run, it's just there to protect you. Rob, so flatten, generally speaking, is used for futures. Got to be honest, I've never clicked it on the option chain or on the active trader for the option chain. I take it off. So I just have cancel on there. But what it does is flatten, and flat being flat, that's an old term in the market where you have no positions. You're flat. Um, So these aren't necessarily three push wedges. JJ, good question. Not necessarily three push wedges. These are just trend lines. You could have made an argument for a little one down here looking for that reversal, but I was more interested. And then actually, you might have even seen my charts on trade floor. I actually was running this trend too, and caught this breakdown. But then this trend was broken and that's just like looks ugly. And so I drew the new trend going down here. And so I'm just treating those as a trend. And when you have this strong of momentum in a direction, you obviously want to be looking to short the pops and then sticking with just those bounces up there to short. Obviously we were willing to take a little bounce attempt here. I think we took a bounce attempt. I don't remember. Oh, I think somewhere around here in the voice chat, maybe. Hit one more into close, and then the final bounce attempt did not bounce and went to zero. Something, or I think it took minus 80%. Yep, greed kills everybody. That's the issue, and definitely nobody's actually hitting those, man. I swear like half the gains you see in GameStop on SPX, that's just like paper trading. So don't ever get caught up in that. And then like it's even can be interesting to watch the volume on those SPX end today. Like there's like 20 volume or 40 volume or whatever getting traded, and people are trying to say they're in 50 contracts. Always be cautious of that. SPX is it's a death wish. It's nothing more than gambling. Definitely stick to SPY. And we're not going to do it right now, but people got to realize that SPY is safer, cheaper, and dollar for dollar pays the same amount. So you got to I always encourage people to uh learn about some option Greeks, because you'll start to learn how to finesse the market a little bit almost, and that's of course how you identify your entries and your risks and blah blah blah. You like, Delta is there to tell you how much you're making or losing. So like those Greeks are there for a reason. And then you can start to compare your SPX Greeks and what you're buying versus your SPY Greeks, and you'll start to realize that they line up pretty good because, no surprise, it's just 1/10 of SPX. So struggling with hesitation from time to time. Great question. And huge for people. I'm sure there's like a million people in the Discord every day. Everybody struggles a little bit with hesitation. And something that I like to tell people is good. Cherish that, because waiting too long is almost always better than rushing. And so what you have to do, and it's something I've been working on with one of my buddies. I'm not sure if he's in here tonight, but he great trader, really good at charts, reads charts, builds awesome trade plans, has trouble pulling the trigger. I tell him swing the bat. What you have to do is you have to swing the bat. And so there's this very fine line, and we see it in OOT all the time. You need to build confidence, but you need to build confidence slowly and smartly. We have people every week. Like I'll have one guy in my DMs 2 months ago telling me I am down 80% year to date. I'm struggling. I can't put anything right. Now he's the dude on trade floor being the loudest guy around. Don't be that guy. What you need to do is build slow and steady confidence and use the hesitation for your advantage. Be picky. Wait for the trade to come to you, and when that trade comes, pull the trigger. And something you can always do: size down. That's what um, that's what I've got my buddy doing. He doesn't have a small board or anything. He's got some thousands of bucks in there, and he's like, I want to trade with 5% position size. And I said, no, trade one contract and take more entries. Build the confidence. Maybe you want to hit calls right here, but you got 10 contracts to spy because that's a proper position size for your port or whatever. Well, you're sweating it. Buy one and see if you're right, and buy one and see if you're right, and just treat it like that, and your hesitation will start to really, really dwindle. The more actual success you have, the more comfortable you will feel to pull the trigger when you need to. Yeah, GameStop's a trap, SK. Yeah, and I mean, whatever. SPX is it's got a place, but it should not be you shouldn't be trading SPX day to day. Let's be real here. You guys are all getting smoked on that thing. I get the DMs from you all. I know what's really going on behind the scenes of SPX, and it ain't pretty. So this was a private message. What does level to level mean? So that's just kind of that's Flips's, word for trading support and resistance. You buy calls at support, you trade them up to resistance. So you go from price level to price level. All it is support and resistance trading. It's you buy at a level, you sell at another level. That's your entry level, that's your exit level. That's how you have to trade the market. If you don't know where you're trying to get in and you don't know where you're trying to get to, you're already kind of shooting yourself in the foot. Yeah, SK, everybody struggles with hesitation in the beginning. And what you have to do is, like I said, start swinging that bat, start trusting your technicals, chart things. Go back and look at old charts. I'm not telling you to go do this like crazy back test for 30 years nonsense people talk about, but just go back and look at some random days and say, I like to short the first test of the 20 EMA if it's at a resistance level. Go see how it works. That's the great thing about stocks is we can always go back and look at them. And when you start to see whatever your trading strategy is work over and over and over again, then it starts to get easy to pull the trigger. And so yeah, I get it. It's hard for everybody. In most of my one-on-ones, that's like one of the main things I have to talk with people about. The people who are on the cusp, trading's going well for them. They aren't making a ton of money. They aren't losing money, but they're just having trouble getting in the market when they need to. And so it's a huge part of trading psychology to finally just click that buy button when you got to click that buy button. Oh yeah, Rob's right there. Yeah, he said what I said. Watch it play out, see it play out, and then you can say next time, hey, this worked once before. I wonder if it will work again. You know, like oh, I love to play, a trend break with a retest or something, or I love to take a trend break once we've bounced support. One of my favorite things, and I guess we can talk about a trade that I took today, only because it's right here. One of my favorite trades is We set a new low, we break a trend, we take a big bounce, and we consolidate for 10 or 15 minutes. I love to buy the dip on that. My stop's defined, it's typically going to be pretty dang tight. And so I basically just view like today, this is what we traded. I view this as a nice little range right here. And so, and I see the candle set, I see another candle set, we buy this dip right here. We buy the dip. I mean, the stop's just outside range. It's pretty close. We're targeting up here. Ultimately, we got a little bit more bounce, but this is a trade that I like. I love it even more when it's a double bottom, when you get like a nice, like if we had a bottom here and then a bottom here, and then we consolidated. I love that. That typically gives you some nice strength to the upside, but it's super simple. I love bounce at strong level or double bottom, trend break, consolidation, buy the lows of the consolidation and look for the bounce upside. I mean, people probably try to call it a bull flag or whatever, but it's just on the chart. All it is a nice bounce with some consolidation looking for another move upside. This one was also nice. We had the previous low over here, so there's plenty of reasons to be in there. So yeah, watch those technicals, watch them play out, build a nice little strategy, not necessarily a plan, a strategy. I want XYZ to line up, then I look for my trade. And watch it work, 10 times, 20 times, 100 times, and all of a sudden you'll be like, oh yeah, this is when I click buy. Like you hardly even have to think about it. Yeah, Crash Miss knows. Yeah, Aaron, I mean that's exactly right. And so I'm gonna, talk about something that FaZe does. And this is just a really interesting idea. It's this like little like FaZe like trick, uh it's this little FaZe trick that so he recommends, and I love this idea. I've never done it, but I think it's a great idea. And it rewards you and it shows you something. So FaZe says put, 500 bucks on your put 500 bucks uh put 500 bucks on your desk, put 100 bucks on your desk. And when you hit a trade and you make $40, hold that 40 bucks in your hand and say, hey, this is real money. This is what I just made. Because people can get so detached from just these things bouncing on the screen. I always try to tell them those numbers bouncing are your money. You should be paying attention to them. But that ability to just pull some money out and look at it and say, hey, I just made $40 and actually have it in front of you is a really, really unique idea. And it works for a lot of people. So again, private DM, how do you see the volume coming in for calls or puts? Many different ways to do it. I don't think you should get too hung up on it. What you really want to pay attention to is volume coming into the market. You see something like this trend break, increase in volume, increase in buyer volume, little pullback and a consolidation. Learn the volume of the market. Who cares if some degen's buying 10,000 contracts as same day spies? We want to know what the billionaires are buying on SPY. So just learn stock chart, volume. It's much more important. Really good question. If you're trading options and you're newer to it or anything, how many should you trade? One or two. So something that I like to recommend, just so you can learn the market a little bit. And I have some more detailed stuff talking about how to actually trail trades that you're in. But if you're trading two contracts, this is what I would tell you to do. So say you took this trade with us, you have two contracts, and now uh, maybe hold through this. We get our nice little bounce up. Say you're up 20 bucks a contract. Take your $20, okay, from one of your contracts. Now decide how much profit you are willing to give back. So my rule of thumb is that I like to risk about half of the profit on my first trim. So if we're up $20, my stop now moves to plus $10 on the contract. They're obviously wider than this on something like SPY, but what I like to do is just move it up so it's plus $10 on the contract. And worst case scenario, plus $10 on the trade. So, my original stop, it might, maybe we enter here say we enter here and say our stop is down here. Well, we get this nice little bounce on this next candle. And so we trim here and we take our $20. $20 is booked. Well, now I'm going to move my stop up from wherever it was to I'm willing to risk $10 of my profit. So I move the stop up. I'm still $10 below break even, but if that hits, then I still make $10 on the trade. No matter what, you've booked $10 on the trade and you haven't tightened your stop up enough that you're going to get stopped out right away. So always think of it, if you're in one and you trim one, decide if you want to give back any profit or any of that. Always feel free to sell them all. There's always a million more trades. Never feel bad doing that. But if you want to let one work, that's how I recommend you do it. You take your $20 or whatever it is, and then you decide how much of this profit am I actually willing to give back. And so, technically you're giving back the $20 of profit on the contract you're still holding plus 10 more, but you're still green on the trade. And so that way you can handle it a little bit better. And then we aren't talking about it tonight, but if you join one of my other classes and I guess we could here in a little bit if we don't have too many questions. Uh, there's some tips and tricks to hold trades a little bit longer based on the chart, not based on your feelings. And it can be a little bit more helpful when when you're trading smaller position sizes, your one or two contracts. So it can help you get a little more bang for your buck while still letting the chart tell you what to do. So if we got a little time at the end, I'll show you. Oh yeah, man, I hear it all the time. I was in the middle of a one-on-one one time and a guy accidentally we were trading and he was trying to buy 5 contracts and all of a sudden he bought 55 contracts and he just started breathing all heavy and then stopped out and then said, I gotta go. It will make you sick in too big of a position. Yep, yep. Rob's exactly. And that's what I talked about a lot in the beginning is people hate to lose. People hate to admit they're wrong. I love to admit I'm wrong super, super fast. That's the most important part to me. Will I be teaching Mastermind? I will. So I wasn't really sure here until the last week. I posted the calendar of everything I'll be doing and I included the voice chats that I'll still be doing in normal or in pro OOT as well. But yep, I posted it. I think I'm just doing some beginner classes in there and then I'm actually going to be live trading in there a couple days a week. I think something like that. So yep, I will be in there. No, I get all of my levels from the daily time frame. Always, always, always from the daily time frame. They're going to be the strongest level. They're going to be the strongest levels on the chart. So mine always come from the daily time frame. It's also nice that then you don't have to adjust them. Rudy, I wish I could, but that's a little too much explanation for a class like this. But in very, very dumbed down, simple as I can say it without getting into too many specifics. The most important thing you can do, identify your entry, identify your stop out, identify your take profit. Then look at the chart and say, how many things make me think this is bearish? How many things make me think this is bullish? If, say you're trying to trade calls, if you don't have like 6, 7 reasons to be bullish and, maybe 1 or 2 reasons to be bearish, you don't take that trade. You always have to look at both sides of the coin. And sometimes you might think you see a really good trade, and then you might be like, okay, well, I got 1, 2, 3 bullish things, but man, I actually got 1, 2, 3 bearish things. So maybe this isn't a good trade. Uh, well, so that's way too loaded of a question to answer. A 50, 10, $50 contract versus one $500 contract, that never matters. You need to be managing based on your portfolio size. And if you can get 50, if you can get reasonable strike, if you can get reasonable strikes and everything for a better price, fine. But don't go buy, if you're trying to trade Tesla or something and the $5 out the money contract is $500, that doesn't mean go buy 20 of the $50 out the money contracts for $50. That's horrible. You always need to just base it on your position size and base it on the the proper size for your portfolio, not like that's what you need to focus on. Can your portfolio sustain that size of position? Maybe. But it all based on you. And if the strike isn't reasonable and you can't buy a reasonable strike, then that trade is not for you. Yep, what Crash is saying is exactly right here. He's probably heard me say it 900 times. But yep, and that's how SPY ends up paying oftentimes more than SPX. But it gives you the ability to trim. I mean, everything about it's better. And then also, you know, you're gonna get 3 or 4 at the money SPYs for the price of one $50 at the money SPX, and it's one of those makes a lot more sense than the other. I'll tell you for sure. So it will be a little bit different than the pro. Not so much the trading. I'm gonna trade the exact same as I always do. There'll be a couple things. I mean, I'll talk about some trades that I typically wouldn't talk about in the voice chat pro, uh, but there will be an end of day recap where we actually go over some of the trades that we took and say, we took this because of this and this and this and this reason, so that everybody, hopefully they catch the trades with me, but then we can also see on the charts why I took those trades. Do I post chart every day on my tab? No, when I remember to. If you ever want it, tag me and please remind me. I'm happy to do that. Um, so I'm always gonna put more weight. Good questions. That's a tricky one. Uh, I'm always gonna put more weight on support and resistance levels. You know, EMAs, VWAP, all of it, they're technically lagging. I use them all the time. I love them. They're a very powerful tool when used correctly. But I will always put more weight on a level than I will something like that. And then I know a lot of people do like those EMAs on daily time frames. I'm just an SMA guy on the daily time frames. That's what I like more. Sometimes I'll take note of some of the lower, the shorter durations. Like I love the 513. Uh, what's another one I like? 1220. I kind of like the 1220 on the daily time frame, but the 513 is one that I love on that daily time frame for a shorter EMA. Really just looking for it to like catch a volatile cross, because it will oftentimes pick it up early in the market. Like, boom, here's the cross on the 513 EMA, and we never looked back. And so it'll pick it up early, but I'm always going to put a bunch more weight on them. Like, I'm not going to take a trade based on a daily EMA level. You can see right here, obviously, every short of this 5 EMA has been free money pretty much, till the last week or whatever. But always a level over an EMA for me personally. Yeah, SPX 6000s are probably cheap right now. But then intraday, I got a couple things that I watch that I put weight on them. And VWAP is without a doubt one of them. But then the other is this hourly 20. This thing is like, this is gold to me. I think VWAP's also huge. It's even a level that, the big money people pay attention to it because since it's the volume weighted average price, they're the volume. Big money is the volume. So we get to see where, based on volume, where are longs losing money and where are shorts losing money. And then VWAP's an interesting one because it doesn't change based on time frame. You know what I'm saying? Okay, if you get to the daily, it's going to be slightly different. Looks like we're like 20 cents off from the daily time frame, but because it's all based on volume and how it's calculated, same on all time frames. So a nice, important, strong level to have on watch, and really just tells you where, because it's tracking volume, it's basically tracking algos for you. So we get to know, are the long or short algos making money, and where that line lands in the sand based on the volume. So VWAP is wildly important, but I'm still, support and resistance, or they make the world go round in trading, at least in my opinion. Oh, do I trade VWAP to hourly 20? Every opportunity I get. It's one of my favorite trades. Or a VWAP, VWAP breakdown to hourly 20, break like, break above VWAP 2 hourly 20. I mean, I trade that all the time. And there's a whole slew of people in OOT now that trade the VWAP hourly 20 combo. It's one of my favorite things. I actually have um that's what this ribbon, I know it's ugly, but that's what this ribbon is VWAP and hourly 20 on a ribbon. So I trade that thing all the time. Today was a wild one. We are separated. This market is extended down. It's wild. We got a what? A $7 gap between that. So on the hourly 20, it's just okay. I mean, there's two ways to do it. You can pull up the 20 EMA and just look at it on the hourly chart. But then in my tab, I have multi-time frame EMA pinned in there. It's a study. And so just load up that study, and then I mean, I doubt you guys can see. I never remember if you guys can see this. My box in the middle. Oh yeah, but it's the ribbon. So it's gonna be like multi-time frame moving average. Wonder if you guys see this pop out. Yep, multi-time frame moving average, and then you pick what you want. So you can do hourly, so it's automatically going to set it to the 50. But you can move it to the 20 if you want. Or you should, I mean, I would move it to the 20. But so all you do is just change it right here. And then you do hourly, exponential, type in whatever you want, and you're locked and loaded. Do I take entry within the day? Oh yeah. Oh yeah. I mean, I'm trying to hammer this thing. Like when we're breaking VWAP and we're holding it, I'm looking for that bounce. Maybe I get hourly 20, maybe I don't get hourly 20. Or, we start breaking below that VWAP and I'm looking for some more dip. And then of course over here on the other side, we break above, we get a retest. We're targeting that hourly 20 without a doubt. No. Well, I mean, it depends. So it's looking back 20 candles. So you're basically getting the last 2 days of trading and seeing where people are positioned on it. Uh, so you're basically seeing where people are positioned, based on that hourly 20. The 21's no different. I also, I know everyone trades the 9, 21, and 50. I trade the 20 and 50. I've always used the 20 EMA. I don't know why, but no, you'd probably be pretty hard pressed to uh you'd probably be pretty hard pressed to see too much of a difference on extremely volatile days. Of course, you'd see a little something, but not too much difference there. It's just 1 hour of data, unless that 1 hour of data is like this. Okay. Well, right on, everyone. If we got any more, missed today. Yes, the class will be posted. I've been meaning to mention this. We've had a little hang up with the person posting our classes. He's just really busy. No real issues there. But I'm gonna get taught how to do it, and um, from now on, I will be posting my own lectures. So they should be posted as soon as I'm done. However, that won't be today. So how do you use the ribbon? You use it for bias. So if you are consistently trading below VWAP and hourly 20, today, it's a great example. Consistently trading below hourly VWAP and 20, you're short biased, on most of these bounces. Definitely any breakdowns back below it. Of course, you can try to catch the bounce back to it, but it shows you your nice little bias. Then on a day like yesterday, where maybe we've been downtrendy, we've been having some trouble, where we're breaking back into it. So we know we like to trade towards the hourly 20. Then once we're back above it and we start trading above it, we can start to look to be dip buyers with stops below it. And then we just haven't had one recently. And like you see, it's not like perfect all the time, but I mean, short the break with the retest to your level, buy the dip with the move back to it. You can always look for moves back to the VWAP. On days like this, so I guess not end of day. Days like this, where we're really chopping around inside of it, I really will view it as a range day until we get up or down from it. So it's just a really great tool to show you how's the market feeling, and like I said, if we're just trading way below this thing, shorting those bounces is likely going to be money. I mean, eventually you're probably going to get a reversal candle that blows you, but you want to be just shorting them. And then again, if you're above it, there's a Yeah, well, we don't have any right now, but if you're above it, just look to be a dip buyer. It's just a really simple one to kind of give you an idea of where the market stands. And I use those a lot for entry. I'll use them for target if I'm trading like a counter trend trade. This one, obviously, like VWAP was, I mentioned VWAP should be the target. So if you're taking that counter trend trade, tracking it back to VWAP is oftentimes just a really good target for you. Nope, I don't use alerts at all. Not gonna say they're wrong, but I'm lucky enough to have 3 screens. So I watch everything that I watch, I have pulled up at all times. So I'm lucky enough that I just kind of get to shift the old head to the left and see what I want to see. But if you have a little less like screen space, alerts are your best friend. I will say that I tend to be pretty picky on my entries. So oftentimes an alert, I'm gonna miss my entry, because I'm hopefully catching them at a bounce point or a rejection point, so the reaction is fast. But if they work for you, use them. I think it's a really, really great tool. One of those ones I just never got into. I don't do watch lists either. I don't know why, but it's just not something I've ever really done. Okay, well, if that is gonna do it, thank you so much, everyone. This one was awesome. Uh, Excellent questions tonight. This was fun. I love these trading psychs. We'll probably get back on one next week or next month, rather. Let's see. I'm just trying to see if I missed any questions. Yeah, thank you. Thank you, everybody. Yep. Okay, we look like we're good. Yeah, thank you all so much. And yep, Kath, tag me on Trade Floor, tell me to post my charts. I'm always happy to do it. It takes 2 seconds. But yes, thank you everybody for being here. We will catch you all tomorrow. Little Friday fun day. Hopefully have some fun, and we'll catch you all later. Thank you.